Welcome to this session where we will dive deep into the world of volume profile indicators and how they can help you improve your trading strategy. By the end of this discussion, you will have a solid understanding of the best volume profile tools and how they can assist you in identifying key price levels, understanding support and resistance zones, and finding great opportunities for your trades. Stick with us and you will gain some valuable insights that will take your trading skills to the next level. Let us jump right in. Imagine being able to visualize exactly where the bulk of market activity is taking place, knowing where traders are committing the most volume and identifying those key levels that can either make or break a trend. That is what the standard volume profile brings to the table. We will start by looking at the standard volume profile. The standard volume profile is a tool that shows the volume traded at different price levels over a specific time period. You can imagine this as a histogram that runs along the side of your price chart, showing where most of the trading action took place at different price points. One of the key things to look for when using the standard volume profile is the point of control. This is the price level that saw the most trading volume, and it is often a good place to look for key support or resistance. Another thing to keep an eye on is the value area high and the value area low. These levels show the range where about 70% of all trading took place. When price gets to these levels, they can act as strong areas of support or resistance. Now imagine being able to see at a glance where traders have been most active. This information is incredibly useful because it can help you decide where to enter or exit trades. When analyzing the standard volume profile, you may also want to look for specific chart patterns that align with these key volume levels. For instance, when the price is approaching the point of control, watch for reversal patterns like double tops or double bottoms, as these may indicate a shift in direction. Similarly, if the price is near the value area high or low, look for continuation patterns like flags or pennants that may signal the price will continue in the current trend. These chart patterns combined with the volume profile levels can provide a much clearer picture of potential market movements. The idea is to use both volume information and recognizable patterns to confirm your decisions, giving you more confidence in your trades. Next, let us move on to the session volume profile. This indicator is especially helpful for traders who like to make moves throughout the day, rather than holding trades for weeks or months. The session volume profile calculates volume for each trading session, which means it can show you how volume was distributed for a specific session, such as the New York trading session or the London trading session. If you are focusing on intraday trading, this tool can be a game changer. It shows you where the action is happening throughout the day, and the point of control for each session can help you see important support and resistance levels. A great tip when using this tool is to watch for when the price moves above or below the value area for the session. This can mean that a breakout is happening, which is a great opportunity for a potential trade. It is like getting a sneak peek at where traders are putting their money during different parts of the day, which is crucial if you want to stay ahead. When analyzing the session volume profile, it is also helpful to look for certain chart patterns that can provide more confirmation of a potential breakout or reversal. For example, if the price moves above the value area high during a session, you may see bullish patterns like a flag, ascending triangle, or cup and handle pattern forming. A bullish flag indicates a brief consolidation before the trend continues, while an ascending triangle shows a buildup of buying pressure at resistance. The cup and handle pattern suggests a continuation with an initial dip and then a breakout. These all would indicate that buyers are in control and a breakout is more likely to continue. Conversely, if the price drops below the value area low, look for bearish patterns like a descending triangle, head and shoulders, or double top, which may signal further downward movement. A descending triangle forms as the price makes lower highs but holds at a support level, indicating pressure to break downwards. The head and shoulders pattern is a reversal signal where the price peaks, declines, forms a higher peak, and then declines again, often leading to a downtrend. A double top is another reversal pattern indicating that the price failed to break resistance twice and may decline from there. Additionally, keep an eye out for patterns like wedges, both rising and falling. A rising wedge often indicates a bearish reversal, especially when formed after a strong uptrend, suggesting a loss of upward momentum. A falling wedge, on the other hand, could indicate a bullish reversal when formed during a downtrend, suggesting that selling pressure is weakening. By combining the session volume profile with recognizable chart patterns, you can gain a deeper understanding of whether a breakout has real strength or if a reversal might be on the horizon. These patterns give you a visual clue, making it easier to decide whether to enter or exit trades, and they work hand in hand with the volume information to give you a clearer picture of market sentiment and potential trading opportunities. Understanding these specific patterns and their implications helps you make more precise decisions, especially when volume supports the movement indicated by the pattern. Now let us take a look at the fixed range volume profile. This one is all about flexibility. The fixed range volume profile allows you to pick a specific time period or price range and shows you the volume distribution just for that range. Imagine if you want to know exactly where the volume is for a specific price, move, or trend. You can use this indicator to highlight that time or price and see all the details. It is great for identifying where people are putting their money during specific times of high volatility or consolidation. This means you can decide where to set your targets or even where to place stop losses. The ability to zoom in on one specific move makes this a really valuable tool, especially if you want to figure out what happened during a big price swing. Another great tool to help you understand volume is the volume by price indicator. This one is similar to the standard volume profile, but it looks at volume over the entire chart instead of just a specific period. The volume by price indicator helps you spot those long-term zones of trading interest. These zones are the places where the market has spent a lot of time trading at a particular price. This is useful for identifying major areas that might act as support or resistance for a long time. It is the kind of information that can give you the bigger picture and help you make better decisions when holding positions for weeks or months. It is like zooming out and seeing where all the important action happened across the entire chart, which can make all the difference for longer-term trades. When using the volume by price indicator, you can also benefit from recognizing key chart patterns that often align with these high volume areas. For example, if a high volume zone coincides with a double bottom pattern, it can serve as a strong indication of potential price support and a possible reversal upward. Double bottoms typically indicate that the price has tested a certain level twice and failed to break lower, suggesting buyer strength at that level. Similarly, if you spot a high volume zone that aligns with an ascending triangle, this can be a powerful signal that buyers are building pressure to break through resistance. In addition, volume by price can highlight areas where continuation patterns such as bullish flags or pennants might be forming. These patterns suggest a brief pause in the current trend before it continues. If these continuation patterns align with a high volume zone, it adds weight to the likelihood that the trend will persist. Conversely, if a high volume zone coincides with a bearish pattern like a head and shoulders or a descending triangle, it can confirm the idea that sellers are gaining control and that a downtrend may follow. Another useful approach is to look for volume by price levels that align with broader wedge patterns. A falling wedge formed during a downtrend that aligns with a high volume zone may suggest a potential bullish reversal as sellers lose momentum. Similarly, a rising wedge formed during an uptrend and supported by significant volume can indicate that buying interest is waning, signaling a potential bearish reversal. By incorporating these chart patterns with the volume by price indicator, you gain a more complete understanding of potential support and resistance levels, market sentiment, and trend strength. It allows you to not only see where trading activity is concentrated, but also to assess the likelihood of future price movements based on the alignment of volume with specific chart patterns. This combination provides a strong basis for making well-informed trading decisions, especially when holding positions for the longer term. Now let us move on to the volume profile visible range. This is another flexible volume profile tool that changes as you zoom in or out on your chart. It only shows you the volume for the price levels that you are looking at on your screen. The visible range volume profile is really convenient because it automatically adjusts based on what you are seeing, and it helps you focus on the most relevant data without having to tweak settings or select time periods manually. Whether you are zoomed in on a short-term trade or zoomed out to look at a longer trend, the volume profile visible range helps you spot key price levels that are likely to have an impact. Imagine being able to quickly see the most important price levels with just a few clicks. This is exactly what makes the visible range volume profile such a useful tool for traders at all experience levels. When analyzing the volume profile visible range, it is also important to watch for significant chart patterns that align with these key volume levels. For example, if you zoom in and notice a high volume area that coincides with a double bottom pattern, this can indicate a strong support level where buyers have consistently stepped in. The double bottom pattern forming at a high volume level shows that buyers are defending this price and a reversal upward may be imminent. Similarly, if the visible range highlights a high volume area where a bullish flag or cup and handle pattern is forming, this may signal the continuation of an uptrend, with the volume acting as a confirmation of market interest. Conversely, if the visible range shows a high volume level combined with a bearish pattern, such as a head and shoulders or a double top, it could signal resistance and a potential downward move. The head and shoulders pattern, for instance, appearing near a high volume level, often suggests a strong reversal point, as the volume indicates heavy selling pressure. Identifying these patterns in conjunction with high volume areas can give you greater confidence in predicting price movements. Another key pattern to look for is the wedge pattern, which can be either rising or falling. A falling wedge combined with high volume accumulation often indicates a potential bullish reversal, especially when found during a downtrend. On the other hand, a rising wedge near a high volume area may suggest a bearish reversal, signaling that upward momentum is weakening and sellers are taking over. The visible range makes it easy to spot these patterns in real time, giving traders an edge in decision making. By integrating the visible range volume profile with these common chart patterns, you can develop a deeper understanding of price action and market sentiment. This combination allows you to identify key price levels and better predict whether those levels will hold or break, which is crucial for making informed trading decisions. It is not just about seeing where the volume is. It is about recognizing the story the price is telling you when it interacts with those volume levels. The visible range volume profile helps highlight the most important levels in real time, making it an invaluable tool for traders of all experience levels who want to make the most of both technical patterns and volume data. Let us also talk about the composite volume profile. This tool takes the data from multiple sessions and combines it into one larger volume profile. For traders who like to hold trades for several days or weeks, this tool is especially helpful. The composite volume profile helps you see the volume distribution over a longer time frame. You will be able to spot areas of high volume accumulation that may act as significant support or resistance levels. This is really important for understanding where the market might find strong support or where resistance might push the price back down. Think about it like seeing the bigger picture that tells you where the major levels are across several days or even weeks. The more you know about these key levels, the better you can plan your trades. Another unique tool we have is the time price opportunity profile. This one is a bit different from the standard volume profile because instead of showing how much volume was traded, it shows how much time the price has spent at each level. Why is this useful? Because it can help you figure out where the market sees fair value. Areas where the price has spent a lot of time are often areas where traders feel comfortable trading. These zones are known as balance zones. The time price opportunity profile is especially good for helping you prepare for breakouts or reversals. If the price spent a lot of time in one area and then suddenly moves away, that could be the beginning of a new trend. Think of this as being able to spot areas of equilibrium where the market has been balanced and being ready for when it tips over into a new direction. When using the time price opportunity profile, it is also helpful to be on the lookout for specific chart patterns that can confirm a potential breakout or reversal. For example, if you identify a balance zone that coincides with a double bottom pattern, it can be a strong signal of a potential upward move. The double bottom indicates that sellers have tried twice to push the price lower but failed, and the time spent in that area suggests that buyers are gaining confidence. If the price suddenly moves away from this balance zone, it could signal the beginning of a new uptrend. Another chart pattern to watch for is the head and shoulders formation, especially when it occurs near a time price opportunity balance zone. This pattern is a reliable reversal signal and suggests that the market is struggling to move higher. If you spot a head and shoulders pattern within a balance zone and the price starts moving away from that zone, it is often a sign that a downtrend is beginning. The time price opportunity profile helps reinforce this pattern by showing that the market found equilibrium, and once it broke away, a significant move followed. Triangles, both ascending and descending, are also key patterns to observe. An ascending triangle within a balance zone can indicate increasing buying pressure as the market repeatedly tests resistance while maintaining higher lows. Conversely, a descending triangle within a balance zone shows that sellers are gaining strength, pressing the price down while the support level remains under pressure. These patterns, when paired with the time spent at certain levels, give a clear indication of market sentiment and possible price movement. Furthermore, wedges are also critical patterns to watch in conjunction with the time price opportunity profile. A falling wedge formed during a time price opportunity balance zone can be a bullish signal, indicating that the sellers are losing momentum and a potential reversal might be imminent. Similarly, a rising wedge can signal a bearish reversal, suggesting that buyers are losing steam and that the price may soon fall. Using the time spent at these levels helps confirm whether the market is finding balance or is preparing for a shift. By using the time price opportunity profile alongside these chart patterns, you gain valuable insight into how price interacts with key areas of equilibrium. These patterns provide context to the time the price spends at each level, allowing you to better anticipate future moves. Whether you are looking for potential breakouts, continuations, or reversals, understanding these patterns within the framework of time, price, opportunity will make your trading decisions more informed and precise. Finally, we should discuss the market profile. This tool is similar to the volume profile, but it is more focused on time and price rather than the volume itself. It helps you organize price movements into a kind of bell-shaped curve, making it easier to see where the market found value over a longer period. If you are a swing trader or someone who is interested in longer-term trends, this tool is especially useful. It shows you where the market has spent the most time, which can often act as strong support or resistance. By understanding these value areas, you can anticipate where price might move next and plan accordingly. When using the market profile, it is also helpful to identify certain chart patterns that may give you additional confirmation for market movements. One such pattern is the double distribution pattern. This occurs when there are two distinct high volume areas separated by a low volume area, often indicating a significant shift in sentiment. When the market forms this pattern, it suggests that after a period of consolidation, traders have decided to either accumulate or distribute heavily, leading to a strong move in one direction. Knowing this can help you prepare for a potential breakout or identify a key area to watch. Another key chart pattern to watch for in market profiles is the P-shaped or B-shaped profile. A P-shaped profile typically forms during uptrends and suggests short covering or accumulation by buyers, leading to higher prices. Conversely, a B-shaped profile indicates long liquidation and suggests that sellers have taken control. These profiles give insight into the behavior of buyers and sellers, helping you determine whether an ongoing trend is likely to continue or if a reversal may be imminent. Head and shoulders formations can also be identified within the context of the market profile. For example, if the price has spent significant time at a particular level, forming a peak followed by a higher peak and then a lower peak, this could be a head and shoulders pattern indicating a reversal. When the neckline coincides with a high time-based value area, it reinforces the likelihood of a strong move down once broken. Another pattern to keep an eye on is the balancing profile, also known as a bell curve or value area. This occurs when the market has spent a lot of time in a particular range, and the profile takes the shape of a normal distribution. When price moves away from this balance area, it often signals a breakout or breakdown as the market moves from balance to imbalance. Recognizing these balance areas and watching for signs of breaking away can help you catch significant market moves before they happen. Wedges and triangles are also important patterns to identify in the context of market profiles. A wedge forming at the end of a well-defined balance zone can indicate that the price is preparing for a breakout, especially if there is a clear volume reduction followed by a burst of activity. Ascending and descending triangles forming at key value areas can also provide clues about whether price is likely to break upwards or downwards. These patterns, when combined with the time-based focus of the market profile, give additional strength to predictions. By combining the market profile with these chart patterns, you gain a comprehensive understanding of price action, market sentiment, and the potential strength or weakness of trends. The ability to identify these patterns in conjunction with time-based value areas allows you to make more accurate trading decisions. Whether you are preparing for a breakout, continuation, or reversal, using the market profile alongside these well-known patterns will make your analysis much more robust and actionable. To recap what we have covered today, we talked about several volume profile indicators and how they can be used to make better trading decisions. Each of these tools provides a unique perspective on how volume is distributed and can help you understand key price levels and identify potential trading opportunities. The actionable step for you now is to decide which volume profile tool best suits your trading style. If you are a day trader, you might want to focus on the session or visible range volume profile. If you are more into swing trading, consider using the composite volume profile or the market profile to get a bigger picture view of the market. Each of these tools offers different advantages, and the key is to find the one that works best for you. Keep practicing with these volume profile indicators, and you will see how they become an essential part of your trading strategy. Remember, the more you practice and refine your use of these tools, the better your decision-making will become. Feel free to ask questions or share your thoughts as you go along. Engagement is key to learning, and the more you discuss and explore these concepts, the more confident you will be in using them effectively in your trades.